thank you guys all for coming and joining us. I'm sure that Katherine needs no introduction. And actually, how I know this is a bit of a funny story. So, I posted yesterday that I was really excited to have this conversation. And promptly I received a text from a friend of mine. She was like, "Oh my God, you're talking to Katherine McConnell tomorrow. That's so exciting. I've been trying so hard to get a job at Brighte. Can you please put me in touch with her?" And it was, I was unsurprised by this, but I think is a sign of the success that Brighte has had, not just since inception, but particularly in the last 12 months. Everyone here knows Katherine is the founder and CEO of Brighte. It's a credit technology platform that makes it easier for Australians to pay for home energy and home improvements. She had 16 years of investment banking experience, 14 of which were at Macquarie Bank. And so had, I think, a perfect background to come and bring her vision to life in 2015. What I think is so incredible is that since then they have approved more than $800 million in finance for 100,000 Aussie households and become the 6th fastest growing technology company in the country. That is an astonishing achievement. They just last December closed $100 million. I am really honoured to welcome you, Katherine. Thanks for coming along.
Oh, Pete, thank you so much. It was so flattering, all the things that you said. So thank you, for a wonderful introduction, and, great to be here and share parts of the journey with you.
Excellent. As am I. I'm looking forward to kicking off. And look, can I be a little naughty and just say that when I think of the word banker, the second word that comes into my mind is not entrepreneur. So maybe you can tell us a little bit how it was the second word that came into your mind and how you decided that you wanted to go ahead and build your own business.
Well, being, reluctant entrepreneur or entrepreneur was never in my vocabulary. And even when I think about when I resigned, so the day I walked in and resigned, and the events that led up to that, I never thought about being entrepreneur. I thought there was this problem, and this problem was real and big, and it was urgent, and I just felt that I had all of the skills that were needed to solve that problem. And it's funny, I didn't think about building a company or having to manage people or having to raise capital. I just didn't think about all of these things. And so naivety for me, I'm really, really lucky. And if I had have known, I wouldn't have done it, is the reality of it. If I had have known it was going to be involved, I wouldn't have done it. And so, what I did know was that there was a co-working space. I'd read about Stone and Chalk, and, and so I gave them a call, and, I went there, and I thought, I'm here, I'm safe, I'm where I need to be to start a company. And, so I was naive. And, when I look back at the banking experience, it was perfect experience. I think Macquarie is a great breeding ground. I know Larry Diamond at Zip was at Macquarie, and many, many others. But it was a fantastic breeding ground when I reflect to be an entrepreneur.
And when you were kind of, I mean, there must have been a period of time, obviously, when you were at Macquarie and you were thinking about building a business. Was it ever in your mind, you know what I'll do? I'll work on this nights and weekends and see how far I can get. Like when you must have at some point said, no, I literally just have to take the plunge here. Like how did that happen?
Well, funny. One of the things was I started thinking that I'd create a blog. And so we'd gotten solar in 2010. We got solar in 2012. We got more in 2015, and we got batteries in 2015. And I knew that when we got batteries, we were one of the first families. Tesla hadn't done its first installation yet. We were one of the first families to get, the first generation of lithium-ion batteries. And I was really excited. I was excited about that technology, the energy management technology, and just what the future looked like. And I got a glimpse of what it looked like. And what I saw was that finance was going to be the biggest blocker that held back the uptake and the acceleration of solar and then batteries. And so it just, that started playing on my mind at the same time as when I got batteries. And so my first step was, well, I just want to help people get batteries. And so what actually started was, I started writing, well, how do I help people get batteries? And then I thought about it more, and I started writing about the problem. And then I started writing about how you'd solve this problem. And it ended up becoming a business plan that I worked on for about 4 or 5 months before I resigned. And so I'd wake up at, I had little kids at the time. And so I'd wake up at, 3:30. The kids would wake up at 6:30. So I'd do 3 hours in the morning before they woke up. And then at night I'd get back and I'd do another hour or two. So I was doing 5 hours a day, 5 days a week. And then on the weekends, I was doing about, 8 hours each day. And I did that for about 4 or 5 months. I started getting like really crazy about it. So a bit obsessed,
Yeah, I can, when you said 3:30 in the morning, I think everybody was like, yeah, okay, crazy and obsessed. Like, I think that's when you're crazy and obsessed. That is amazing.
I didn't see it. Yeah, I didn't see it. I just saw that I just started seeing urgency. And I really delighted in those mornings getting up early. I had this really lovely little postcard, which my husband actually got made into wallpaper in our study. And it's a Muhammad Ali, and it says, it's him jogging on a road, and it's pitch black, and he's jogging, and the fight is won or lost, far away from the distance, behind the lines, out there on the road, long before I dance under those lights. And so I'd get my cup of black coffee, and I'd kind of look around, and I'd see all the street lights were on, but all the house lights were off. And I thought, this is it. This is me putting in the hard work now, and one day it'll pay off. And that's kind of what I had in my mind.
That is, I have to say, that is very inspirational and also incredibly daunting if that's what we all have to do to build great companies. Was there, I mean, I think I already know the answer to this question, but was there a moment where you were like, oh gosh, I'm going to, exchange what has been a very stable, income and corporate career for being a solo founder and building something from scratch?
Yeah, there was a moment when at work I wasn't getting the acceleration in my career that I thought I deserved. Yeah. And so that was the final bit that I thought, my husband was the one who said, you have to back yourself, you have to do something, you have to back yourself. And I probably didn't have the confidence at that stage, but hearing from him that he thought it was okay to think about doing something with my document, and hearing from him that, financially, we started talking about the changes we could make as a family. So stop the cleaner, stop the lawnmower guy, and, take the kids out of private school. So we did lots of things we talked through and how we'd navigate, financially getting some money out and for the repayment. So we did a lot of discussion, and then we found a way, and we found a pathway for funds. And I felt comfortable that pathway would get me far enough to a point where I'd have something on market, and then I'd have to go externally to get some funding. And so when all those dots kind of gave us both enough comfort, then I said, okay, next week I'm walking in to resign. So it took me a week to work out how I was going to do it and what I'd say, but and it just happened, and then it moved pretty fast from there.
Okay, so can I just clarify though, because I read it in the AFR, and I just want to understand if this is your pathway, that you actually drew down on your mortgage to provide the first finance for solar panels and batteries. Is that what you mean by a pathway? Because I would also describe that as being pretty gutsy.
Yeah, absolutely. So, I don't know how much I like it. I know it was in the AFR, but yeah, we refinanced the house. We got it revalued, and was able to extract, great property prices in Sydney. They're going through the roof now. Great time for someone to start a business, get your house revalued, get some money out, And so we'd been through a bit of a spike on the northern beaches, and so we're able to get some money out. And absolutely, that money was ours. It was skin in the game. It was real, and it just meant for me that it was never going to be a cottage industry. I was not doing this to start up a business, a side hustle, or something that was, just going to be a really small business. This was going to be real. It was going to be big, and I was going to risk our family's comforts, our family's, financial security to bet on this. And my husband, my life partner was backing me that I could do that. So that was just hugely liberating. And a great way to start that journey.
Look, all I can say is it's very inspirational, but I hear what you mean in that it was, it's foundational, right? In that you felt this, that it provided you the platform, like you by committing, it made it easier to lean into the opportunity, right?
I was really fortunate that I had that capital. A lot of people don't have that, and they have the great idea, and that's where they're, you can help. And but I was really fortunate. I'm 45 now, so I was 39 when I started this journey, and so we were able to get into the property market and have something to draw on. But having that skin in the game is really different, and the responsibility that you have to make it work is really different as well.
Yeah, look, I mean, I think this is genuinely an important thing, right? Like, I mean, this is part of the reason why I was interested in joining Antler, was the prospect of financing people really at the earliest stage, and because, as you say, like, there are so many people out there that that don't have any way really access to any capital to get going, and yet there is so many ideas and wonderful people out there that you want to be able to help them, and you're right, that's one of our aspirations as a fund. Not that it necessarily makes life like the experience of building a company is just such a tough one, no matter what your starting point is, right? I mean, my understanding is that you spent the next 6 months doing literally hundreds of meetings, like 100 meetings or something to do your first round of funding. I'm interested, right? Because this is one of these things that it can be quite a shock, I think, when you first start a company to realize how many times you can get told no. And that, like, and I think I know your answer as to why you didn't stop, but how did you come to terms with that? Because it's a really high level of rejection, right? You don't have that level of rejection in your ordinary life, and then suddenly you're flooded with rejection. How did you deal with it?
Yeah. And it's a great, great question for people who are in that early stage. I think it is, firstly, I wasn't experienced in raising capital. I was a sales background, so I knew how to do pitches, and I was able to draw on presentations and pitches, and explain financial benefits for why they should invest. So that held me in great stead. So non-financial experienced founders, I think, would have had that disadvantage. But starting to knock on doors, firstly, being rejected before you even get the appointment, and then doing the appointment, and then presenting, and then getting feedback. I'd like to say in all of the situations, I took it as, it's just no today. And some of them I did. I kind of got that impression that, you just need to put a bit more work in and get a bit more product market fit, and we'll be here. And those meetings I loved, because I did just see it as, I'm going to get you on board, but there were many others that I kind of thought the way they gave the feedback, wasn't kind, wasn't, human. And, that's definitely off-putting. And I think it's just resilience. It's easy to say that, but it does get you down. You've got to keep on going. And, I was just really lucky that I believed that the problem was real. And I believed it was big, and I'd done the numbers, and I knew it made sense. So in the end, I had to find my advocates. I had to find the people who understood the problem. And when I found them, it was easier to explain. And it was just different things I had to give them comfort on. It wasn't, everything. Once you found people who either understood point of sale finance, or they understood credit or lending, I didn't have to, explain everything. I then just had to justify the addressable market, the size, and that I was experienced and could bring a team together to be able to deliver on this idea. So it is really soul destroying. You've got to be resilient. But it comes back to the first principle of, you really just have to believe in what you're doing. And I absolutely did.
Yeah, I think one of the things that I read that you'd said previously is that, you know, you need to have more than a good idea. You actually have to have real depth of experience. And you know, I mean, I think that that's something that we really believe. You know, we look. One of the things that we do is we spend a lot of time looking for domain experts, right? Who have deep subject matter expertise. And this listening to your last answer, what strikes me is, if you are really knowledgeable about your area, one of the things that you're actually doing when you go out searching for investors is finding ones who have this kind of shared knowledge, or at least a sympathy for what you are talking about. Where else do you think it matters? Like how do you think it helps you navigate day-to-day complexities and influences the way you build the business?
So in how I undertook the capital raise, or
no, I mean like domain, like
the domain
expertise. Yeah, like because I think, you know, obviously one is, okay, well, you know, the type of capital you want, but like there are other parts of building a business that really draw on your experience base. I'm just interested to hear where you think that is most relevant.
So, you know, now we've got 140 people. And so we're delivering the same product on market. Plus we've got a second product that's about 13% of our business. But so the majority of our business is the product that I set up. And so when we set up, it was me, and I hired one other person because I'm not a tech background. So I had someone to be the developer. And so why domain experience is really important is I had to do it all, because I had to conserve my capital. And it's a highly regulated industry, you know, really complex with credit lending, reputational risk, and so many systems. And so I had to set that up. And so for me, it was important to have that domain expertise, because I didn't have the capital to be able to pay everyone to do that. And so to set that up at the start, but then now, you know, that continued, and over time you were able to bring more people on. But for the first year, I was still doing many of those functions. You do the capital raise, you can bring more people on. You have 8 people working for you, you know, so you can hand off some of the responsibilities, but you continue to do so many jobs and wear so many hats. And so for me, that domain expertise was just really important to get the business off the ground. And as I raised more capital, I could bring in more people to take on more of the tasks. But that's why it was great. I mean, I still have the ability to dive in deep when it's needed. But now I've got to be more at the, you know, peripheral and you know, up top and around everything. But that ability to dive in is only there because I have that domain expertise.
And I'm just going to kind of paraphrase a question out of the Q&A, that's come in from the Q&A from Mark. I mean, is the kind of the innovation of the company, do you see the innovation of the company as being in the technology, or is it in the lending, or is it both? Like how would you describe what you think is kind of, you know, what makes you a market leader?
So firstly, I think it was in identification of the problem that you could be niche and service this niche industry of energy, you know, specifically. So I think that was the first thing that we did well. The second thing was it was identifying that you could use a technology solution, a technology platform to address that problem. And so there was an existing solution on the market, but it was paper-based. And so we came in, we've never had a paper solution. Everything was app, and we've got a web portal. So day one, it's always been digital. And so it's built on a technology platform, and that makes it scalable. So, you know, focused on a niche area in energy, used a technology platform to create a scalable solution. And, you know, I think they're the two things. Outside of that, I think it's around execution, like building a team that can execute, because it's so complex. The business that we've set up to do what we've done in this time frame, I think our IP then is really bringing the team together and being able to execute. And that might sound easy, but that's really hard to do. So building the right culture and building a high performing team that has the ability to execute.
How this is really interesting. I think that, I mean, I'm going to guess that, or at least for me, 2020 was a real year of a really hard lesson, I think, in the importance of culture in building a business, you know, and and how it can be incredibly sustaining in hard times as well. How did you think about that from, like, was that something you thought about from day one, saying, oh, I know the type of person, the type of culture that I want to be in this business along with me? Or is it something that has evolved as you've, like, now with 140 people and it's an absolute necessity?
So I guess yes and no. When I think about it, at the start, I hired people that were a technical fit.
Right.
So I never had culture and values document and, talked about them with people on day one or on day, 350. I still didn't have that. However, when I think back, I always hired people that I thought were genuine and empathetic and effectively shared values that I find are important. And so if someone I thought was like arrogant or, didn't kind of connect well. So it wasn't an unconscious bias, but it was, I think there were things that I held, that I thought were important. It wasn't until about 2 years ago that we codified those as a business. And so we spent a lot of time documenting them, debating them as a business. They weren't allowed to be aspirational. They had to be who we were and what we thought was important in our culture. And we documented. And then now we live by them. We talk to them every day. They're so intrinsic to who we are and how we hire. But I didn't have the luxury of hiring on values at the beginning. But when I think back of people that I had to move on, potentially they were moved on because of misalignment with, unspoken values that I had.
Yeah. It's really interesting the impact that it can have. And when you, and again, when you suddenly define them, how much clearer they become in the way that you manage the company, right?
Yeah, absolutely.
How about, like, also when you started, so I remember, my wife and I started a business together in Indonesia back in 2012, which was a crazy ride, and we've kept the financial model, which was an NPV model that showed that we were already worth $34 million, just as a reminder of how ridiculous and silly we were. I'm interested to know, for you, when you kind of started and you were trying to build the business model and thinking about the economics of the business, how that looks now several years later, how realistic it was, and how much it defined the way that you built the company over the first couple of years. Like, did you need to know that, or was it as important initially?
So, I think I go back to the point at Macquarie. I would never have resigned had I not thought this was going to be $1 billion business.
Yeah.
I just wouldn't have, and so I could have had a great career at Macquarie. I could have made, money and got promoted. And so, I was never going to go and do my own thing and risk everything had I not thought this was going to be huge. So that's firstly the premise, and I remember when people, I found it frustrating talking to people when I said I'd kind of left Macquarie, and they're like, oh, you must love the workplace flexibility that you have, working from home and being with the kids all the time. It's just to make me irate. So I was thinking, you don't understand what I'm trying to build. So I just found it easy not to talk to people for like that year, actually, just my husband and kids, which I actually did as well. So, I had this belief it was going to be big, because I knew how many people had solar. I knew how many homes, so now there's like 2.6 million homes with solar. I think 5 million are solar suitable. There are only about 75,000 batteries. And so, I've done my numbers on, the unit economics and the profitability of, each customer for the first transaction, the second, the third transactions, the lifetime value profitability. I kind of knew about the inputs. And so one of the biggest being cost of funds. And I knew up front where I was going to start. And I defined a pathway for how I was going to bring that down to, 20% of, 10% really of where we we're going to start off with, and how I was going to, increase the profitability and the net interest margin. So I knew all these inputs. I'd done the work, and, I really believed in how big the opportunity was. And I was able to, that was all in my business plan, and that was part of what I was able to communicate to the investors.
Mm. There might like so it sounds like you were all over the financing component of it, right? But there must have been aspects where it was like, okay, hey, we know that we've got no idea what this is, and I'm going to guess that was more around like acquisition and right. It must have been the acquisition funnel. Like, how did you think about that, and how did you get comfort? You obviously made the bet, like, okay, this is a growing market, lots of people are going, and we just need to be there. But how were you thinking about that before, taking a new mortgage out on your home?
So the acquisition, so we acquire customers through vendors.
Yeah.
So the businesses that sell, solar or the home improvements.
Yeah.
And so that my background was sales.
And you, okay. So you were like,
so I'd worked with 300 of them before I left, and they were the ones who told me that they had a problem and couldn't I fix it up for them at Macquarie? And I said, no, I can't at Macquarie.
Okay.
So I knew the acquisition, and when I'd left, I'd got letters from lots of them saying once it was set up, they were going to start using me. Things like that helped with getting funding. So so that wasn't one of the things. I was not the tech founder. And so that was where when I think about it, strong in product, in the sense I knew the problem, I knew my customers, I knew what the journey had to look like. So, I developed all of that. But as far as the tech platform and the code and the different, systems, that was not my strength. And so that was unknown to me, how much it would cost, who I should trust, I wish I had a tech co-founder. But that was the bit for me. That was the like the black hole. I just didn't know, how I'd navigate that. But I knew what the experience needed to look like and the speed, and
Yeah. So I was just kind of complaining about how tough 2020 was. For you, it ended in $100 million raise. So that is, perhaps we had divergent years. How did that, it's an amazing achievement, by the way. It's just incredible. So how is that experience? What was that like? Just in raw, pure enjoyment terms.
It's crazy. And also I think the thing to note is we raise equity and debt.
Yeah.
So we've raised just under $500 million of debt.
Yeah.
And we raised, in addition to that, about 150 million of equity.
Yeah.
So, as far as the business, we're 650 or so total capital in 5 years. So that 100 million, it is, it's a big number. We have a plan for use of how we're going to spend that, potentially in 2 years or less. So we've got big aspirations. And what that type of thing does is it makes you something. When I had a meeting with Mike Cannon-Brookes once, he said to me, think bigger, move faster. And I wrote it down on a little Post-it note, and I had it on my light for a long time. I don't know where it's moved to. But what
your husband's getting it framed.
Yeah, I've got to find it. What that allowed me to do, the 100 million, is to think much bigger and move much faster. So move faster as far as, that's why we're hiring 61 people. So we're going to move faster, and we're going to stay focused and aligned with our vision, but we're going to move faster as far as there are multiple problems we can now solve, not just the one problem, so we can go wider and go deeper. The 100 million, we want to stay scrappy. One of our values is think big, stay green. So the 100 million cannot change us, in the sense that, we're like a corporate. We can act differently. We can spend more money without thinking. So we still, want to keep our mindset as startup, high growth. But this gives us the flexibility and the ability to think about solving bigger problems, and not living from, every year doing a capital raise, and having to think about, largely, how do you make sure that the, recurring revenue is big enough to justify the growth that you need to do another raise next year. So it gives us the ability to solve much, much bigger problems.
Yeah, This is, I can't believe that I'm trundling this out after just talking about 2020 being my year of culture, but 2021 has been, for me, one of my lessons is that concept of vision. We talk to so many entrepreneurs and so many people building businesses, and it's always really, it's kind of bracing and refreshing when you meet somebody who just outlines a vision that is huge. And I think it really is the only way to go and build great, and so many of them obviously don't work ultimately, but unless you do that, you're never going to be really big. Right.
Yeah. Yeah.
One of the questions on this, if you're happy to answer it, was in fact, which was the first bank to say yes on debt finance all the way back?
NAB, hashtag more than money. I love their slogan. I'll advocate for them any day. I think they've been fantastic. They have been a huge supporter of high growth companies. I know they gave loan facilities to Afterpay and to Zip and Wiser, and this is public, but they invested early as far as debt, so that they came in pretty early. They started off with a corporate debt facility and then progressed to a securitization warehouse, and then did our first issuance, our public market issuance for us. And that was a great strategic relationship for us. They helped us move along the journey, navigate what we needed to get to maturity. And, they are and continue to be a great strategic partner for us.
Yeah, that's really interesting and good on them. Just following on to that, like one of the questions here is about the BNPL industry and whether you think that, new players may, or existing players that are in other segments may move into doing into the same place, into the same segment.
Yeah. When I left Macquarie, it didn't have an industry name. So it was called No Interest Ever Payment Plans.
Yeah.
And so it's matured, as I've been part of the journey. I'm a board director on the Australian Finance Industry Association, and AFIA has just developed the first code for buy now, pay later. And so it's self-regulation, and we just launched that a month or so ago. And it's only now that there's some form of regulation for what's now called buy now, pay later. Right. But for the past 5 years, it was, people called it unregulated credit. It was regulated by different, by different regulators. But it didn't need you didn't need an Australian credit license to provide this type of credit. And so that's what restricted a company like Macquarie providing this type of credit.
Right.
So the reputational risk and also, other banks previously providing this type of credit, because the potential reputational risk in operating in effectively what was a regulatory grey space. Now that there's been more clarification, it's still not regulated by ASIC, but now that there's more clarification, there's a code of conduct. I think it's given, some parties more comfort in participating in the industry. Prior to that, there's been a huge cost on us and others in the industry in navigating, the relationship with different regulators and industry stakeholders. So I think in the future, you might see, CBA's kind of said they're there, they've invested in Klarna. But the thing that I always think is, there's always been credit cards with interest-free periods. So there's been credit cards, and there's 30 days, 60 days, 90 days interest-free. They've always had a similar product. So it's similar. I don't think it's about the product. I think it's about the user experience. I think it's about the innovation. It's the mindset. I think there are other things that might make it difficult for one of the big banks to compete head on. Even if they do use the same product. It's my view.
Hey, so I'm interested, kind of talking about finance, but a different type of finance. Like you've raised money from Grok, from Skip, from Airtree. Probably everybody on the line would like to raise from those offices and funds. Yeah. The most recent raise, Was the experience of doing that raise different? And when I say that, I'm not just talking about the quality of the lunch that they took you out to, but I mean, like, was it did you have to learn new skills, or is this just been so familiar, the financing aspect's been familiar and it's not really been something you needed to learn about as you were going along?
The last round was a little bit crazy. I don't know how much I can even go into it, but yeah, we got given a term sheet
Right.
for a round.
Yeah. Wow.
Yeah, so it's a and so that and then we worked backwards to go to the other existing investors to see if they wanted to take pro rata entitlement. Right. So it was a really different. It'll never happen to any. Well, it'll hopefully happens to lots of people, but I understand most of our investors hadn't seen it happen before.
And so yeah, I guess. But I'm talking like just from the founder lens, right? And this kind of like evolution of your capabilities. Like, have you found yourself kind of having to, each time you've raised finance and the business has kind of taken another jump, has that resulted in another kind of, personal education project of like, oh my God, now I run, a monster business, and how do you do that? Or has it just kind of come naturally as it's moved along?
Yeah, no. So I think on two fronts, like one is the types of things you have to talk about in the round are really different at each stage of maturity. And then, secondly, part of it comes naturally because, part of that journey has been what you've been experiencing. So you can talk to that naturally. But then there's always that next, what's up ahead. How do you convince people of what's up ahead, and that the TAM is as big as you think it is, the addressable market, and your ability to capture that, and your ability to create new products to be able to extract that lifetime value. So I think that I think there's those parts of it. So as we've done different rounds, a pitch deck looks really different because you're proving different things, and so it's helped. Bringing people into the team who can help, who've been through that before, who can help you work through that, working closely with your existing investors, and getting their help to navigate how you do the pitch and their feedback on your pitch before you go to market. So that all helps, having great investors on your register. And then, it's always hard doing a round. I find it personally exciting. And
well, if people are turning up to you and just being like, hey, here's a lot of money, I agree with you, that sounds exciting. That sounds like a fun experience.
The only time it's happened, we've worked for it every other round. But I think it's around, I think we have been really prudent, and so the capital that we've been given, I think we've invested that well. I think we've been prudent managers. I think we have had a good track record on delivering on everything we said we would do. So when we come back, I think hand on heart, we can go, we've done this, plus we've done these other things. And I think that's really important.
And so Matt, beyond, I'm probably talking a little bit earlier, but beyond just like, hey, here's what we're going to do and delivering on it, how much of subsequent capital raising do you think was through, effective cultivation of good investor relations with your earliest investors? Like, do you think that played a part, or was it not a thing?
Yeah, no, the last couple of rounds, I haven't taken new investors on. It's all been done with the existing investors on the register.
Right.
So, absolutely keeping your investors updated on your journey, even if they're not directors. So, just doing, regular updates, and even the first investors that I took on, 33 seed investors, high net wealth, we continue to do updates to them, providing them as much information as we can, telling them about wins and, where we're heading. And so absolutely, in this last round, when I went round to pro rata rights, I still had participants from the family and friends high net wealth round that was still coming in and saying, I want my pro rata, because they were kept up to date. They understood what we were doing, and I just think that journey, and keeping everyone on the journey, keeping everyone engaged is really important. And, from our example and experience, I think it can help you move faster with closing capital raises.
Yeah. Yeah. Well, obviously is super important. We've got, this is interesting. You've got, a question that's come through about talking about like your early hiring, and I think you've kind of touched on it a little bit. But when you were sitting down in those 3:30 a.m. starts, and then during your kind of early months of building the business, did you have a hiring plan? Did you know, or was it just like, hey, I know I need some technical guys, and then we'll work it out from there?
Well, effectively, I guess I did have a hiring plan. I knew that, so I knew I needed to hire an engineer.
Yeah.
And then I knew I needed that person to help me map out who else he needed in his team, which we talked about. And I said, but how long can you do it on your own? And so pushed in as much as I could, probably, regret doing that. And he helped me build that out. And then I knew how far I could take certain things on my own. And so I did start speaking with people that I wanted to bring into the business. And yeah, so I guess I effectively did have a hiring plan. Probably for the first 18 months, I thought about who I was going to bring in and, the specific skills I needed and, budget as well.
Mm-hmm. Yeah. Okay. So just for everybody out there, I'll try and start taking more Q&A for now. We'll keep the conversation. I normally run for about an hour, but we'll see how we go for Q&A. So if you have questions now, please put it in the Q&A, which is in the bottom ribbon on your screen. You'll see there's a couple of sitting in there already. I will go with one. I just think this is insane. So over the past 3 years, you have had 912% revenue growth, which makes you the 6th fastest growing technology company in Australia, according to Deloitte. That's wild. What contributed to that? Like, was there, and perhaps even more, like, did you know that there was a point where you would just go, like that, where did you start seeing that was coming, or did it just like you get 3 months into it and you're like, oh my God, this is going crazy now?
I knew it. Yeah. Okay. Annuity income is like SaaS income. So effectively our average loan size is 48 months. So payment plan, like buy now, pay later payment plan. So it's 48 months. And we recognize the revenue over time. We don't book it up front. And so, when I write, payment plans that are 3 years, 4 years, 5 years, like effectively each month I'm realizing, 1/36 of that revenue. So I lock in income for 3 years, 4 years, 5 years. So I'm stacking it up. So we don't really have bad days here. You have to have bad months or years really. So you're really lucky with that annuity income being stacked up. So as long as you can keep a great control on ensuring your customers pay on time. So effectively your arrears, your hardship, you can manage customers pay on time. And when they miss payments, you're able to help them get back on track. So as long as you can manage that, you've effectively got future income locked in. And then if you can build a product that helps those customers use you again and again for other things, which is what we've done. Customers can use us for solar or batteries or other things around their home. You can lock in future revenue just after that first payment plan. So it's similar to a SaaS where you pay for subscription. You have subscription income coming in. It's very similar to our type of business.
And so just, for my benefit, I was lucky because my wife navigated the complexities of putting solar on our house, and because it's difficult. How do you do that? So you prompt customers and you say, hey, Beat and Susie, have you thought about putting some batteries now on your house? Is that how it works?
Well, it's actually partners. So we've got about, 6,000 different sales agents that are using Brighte at their point of sale. And so we've built a relationship up with, different electricians and tradespeople across the country. We've trained them. We've given them, our app on their phone. And so when they're at your house, because you've contacted them, you may have contacted 3. And so you could have 3, effectively tradies coming to your house, and they could all be, saying, do you want to pay cash or do you want to pay it over time? It's no interest. It's $100 a month, or do you want to pay the $8,000 now? And you're like, no, I'll pay nothing now. I'll get the job done. And then when the job's done, I'll start paying you, $100 a month. And so it's the tradesperson. So we acquire a vendor, or the vendor acquires the customer, and then the customer comes to us and pays us over time.
Right. Okay, so I'm going to go into answering some more of these questions, and I think there's a couple that are a little bit connected. So
Sure.
Margarita is asking, how has your product or product offering evolved over time, and did you have a point at which you had to kind of pivot? So, and then the kind of the second thing that I think is related to Chris's question. She says she's read that you're getting in an energy retailer license. Is it a change? And how is that related then to your gentailer plans?
Yeah. Okay. So in the business, everyone here knows dirty word pivot. I know it's acceptable in startup space. It's just like, it feels as though it's accidental and a mistake. So we don't make mistakes, we learn. So no, but that's got nothing to do with where we are. So we're solving a deep problem. You know, we want power to shift to the home. We want homes to be empowered. We want them to generate and store their own energy. The first problem we solved with customers getting solar was point of sale finance. That was it. The biggest blocker to customers getting solar was they needed finance at the point of sale, because the vendors all told me. And from my own experience in buying solar, it was a problem. So we solved that problem. In my business plan, I saw the future with homes getting batteries. So 2.6 million homes with solar, 100,000 of them only have batteries. Like, so many of them are going to get a battery in the next few years. You know, we think 1 million in 5 years will have batteries. The problem, part of the problem that we'll be able to, you know, support batteries is finance. But there are other things that we need to do to solve the problem with accelerating the uptake of batteries. And so that's what we're doing now. And so point of sale finance was who we were and what we had to do to provide, solve the first problem. The second problem around homes storing their power, we need to do some other things to make it work. And so part of that is, you know, finance, highly complex, energy retail, highly complex. But our vision is, if someone generates their own energy and someone stores their energy, and, you know, they're paying those costs back over time, why should they have to pay a separate bill for any supplementary energy? Like, why can't they just have like a single, and when they have that single, you know, single bill, it could be with Brighte. And what they can do is they can effectively convert what is a bill. It's a you know, an operating expense, but they can convert that to a capital expense to pay back an asset that they own. And solar's got a 20-year life. So, you know, you can turn bills into operating expenses. So it's like converting riding in taxis to converting it to paying back a car that you own, you know? And so you can have it with one provider in one single relationship. And so what we need to navigate is we need to take the complexity out of it for customers. They shouldn't be paying 2 payments, you know, and to accelerate solar and batteries, like, it needs to be simpler. The model needs to be simpler. It needs to be easier. And we're going to remove those blockages, and we want to make it super simple for homes to get batteries. And to do that, we have to do some complex things like become an energy retailer and present customers with a really simple offer that is compelling. Solar has a feed-in tariff, which you get paid by your energy retailer. Batteries also can earn a revenue stream. And there are lots of different ways you can do that. And so we're going to do that on behalf of our customers, and we're going to use that to bring down the cost of batteries. You know, so that's one of the ways we're going to be, you know, accelerating the uptake. And we've got lots of people here that are working on, you know, some really innovative ways to make that more appealing and accelerate the uptake. But it really is, you know, like I mentioned, this capital has given us the ability to go deeper in the problem, to look at what other blockers and barriers were. And, you know, if you've got a great team, your investors trust you to solve more problems and go deeper. And that's effectively what has happened.
And I'm interested because, you know, we talked earlier about, you know, we talked earlier about vision, and that is right. That's just like from initially just like financing the solar panels to becoming a retailer and all of it. Like, do you think of it as a change in vision? Like, do you say, oh gosh, wow, it's gotten so much bigger? Or are you like, actually, no, the vision is the same, but these, I feel like are just steps, they're parts of the evolution.
Yeah, absolutely. It's like multi-product company. So the first blocker that we solved, like the first blocker that we removed was point of sale finance. The second is like make it easier to get batteries, have to do some other things on top of what we've been doing. And in the future, we're going to make it easier to get EVs. We're going to make it easier to do many other things for the home around sustainable homes. And so over time, we're going to continue to grow the business, grow the revenue streams, grow the team, and keep solving more problems. So I don't see it as, I don't see it as pivoting. I see it as just, it's a big problem, and there are different things we're going to have to do to tackle the problem.
Yeah. So actually, multiple questions coming around, and I think that this is really often one of the most challenging issues that you can face when you first start building a business, because you might have domain expertise in one area, but typically building a business about orchestrating multiple pieces of expertise, and you don't have all of it, right? And in some cases, and according to these questions, it manifests in finding a good tech partner. How do you manage kind of knowledge gaps when you're hiring key personnel in areas where you don't have prior experience? What's your kind of way of getting around that problem?
Like the honest answer, like my first
yes.
I got lucky, but then as when I think more recently, when I've hired my first, CFO and, chief risk officer. And so for all of those roles, I have gone to either people I know, and often my, like the VCs or the investors that I have. And I've asked them to introduce me to people who do those roles. And I usually meet 3 or 4 of them. And I ask them, and I tell them, obviously, I've never managed someone like you. So, what do you need? Like, what do you think a good you looks like? What type of background? And I get lots of info. And then I kind of like put it all together and then get the JD, get it out on market. And often I'll rely on those people, even when I'm interviewing, just to get confirmation or feedback on, a bit of instinct. And then for some roles, I do bring in other people. Actually, I'll bring in the board for certain roles to get their confirmation if it's an area that I feel a bit exposed or weak in.
Yeah.
So,
yeah. And what about mentors? Did you have them? Did you have them before? Do you have them now? Are they the same people? How's that evolved from? Because I think, like if, again, like we look at a lot of, like super early, pre-seed businesses, and everybody likes to put on their, their advisors and whatever else. And I think it really matters. Like I know some people who have very, very strong mentor-mentee relationships that evolve with them throughout their time building companies or throughout their careers. Like how's that work for you? How do you set up an advisory panel, so to speak, for Katherine?
Yeah, I haven't formally had mentors, and I guess at one stage I was looking at it, and then I found the person I was thinking of, I probably outgrew too quickly. The one person I'd say you could never outgrow would be Mike Cannon-Brookes. He's so smart. So, he's never been a mentor, but he's been, I guess what I found is that along the way, instead, what's worked for me is I reach out to people when I have specific problems, and I ask if they have time to help. I continue to, get their feedback and support and input, and really value that. And so that's what's worked for me, not having a formal mentor program, not any individuals, and I've not been involved in any kind of groups as well. I am really fortunate that I have fantastic investors. So at Grok, I've got Jeremy Quonglaw there, Brian Rowlands, who's now joined the board as well. At Airtree, I had Craig Blair, and now we've got Jill Finlay, who's joined the board. Peter at Folgro, Kim Jackson at Skip. They're fantastic and they're available. And so, relying on them all, and Mike in the start, I used to meet with him every month or 2, and he helped me with different things I had going on from like late 2016, so early 2017. So, like I didn't say, will you be my mentor? And they said yes, but there are definitely people I rely on for feedback, advice, guidance, and support.
And just I'm gonna so if you didn't do that, just practically speaking, you wanted to see Mike again, you had a really good meeting, you get to the end of the coffee, you're like, oh, Mike, that was pretty visionary and I'd love to hear more. Were you just like, hey, are you free on the 27th of next month? Or like, how did you actually make sure you pinned that down?
Oh, so no, Mike specifically, when he was looking at investing, he said, listen, as part of that, do you want to, Jeremy said, like, Mike would be able to catch up and, every month or two, and we'll lock it in. So his EA locked that in, and that was just something that was, locked in the diary, fortunately. So
That's good.
I didn't have to, say that. For the others though, for board directors, we'll lock it in. Otherwise I'll, give them a quick call, or, do you have time to chat? So I think depending on the relationship, and, over time, I think you get more comfortable with the person, and, you can definitely more comfortable in, how you ask for time. But I definitely have reached out to people on LinkedIn quite a lot, randoms or connection. I ask people to be connected, and where someone has a specific skill set and I need to talk to them. So yeah, I have and still do that. I did it today. So, yeah.
Okay, couple of industry questions here. I'm gonna wrap up in the next 5 minutes, but I'm trying to get through all the questions here.
Yeah.
On to this is a kind of a more of an industry related one. What do you think about virtual? What do you think the impact of virtual power plants would be on Brighte?
Yeah.
And do you have plans to involve into an energy sharing model or blockchain model?
So I definitely think that when firstly we solve the problem of more than 75,000 homes having a battery. So when, we've got 1 million homes with batteries, I definitely think that there will be ways that those homes will group their batteries together.
Yep.
And it may be like community batteries. Definitely you need virtual power plants. So virtual power plants are like what I effectively call monetization of the battery. And we're absolutely going to be doing battery monetization. So, that is something we're going to be doing. And I think when households get more batteries, existing regulations will change, and ways that people think about using their battery will change. Numbers are low. There's lots of kind of papers and pilot programs now for what people, are thinking might happen. But I just think there's going to be so much change over the next few years.
Mm-hmm. When do you think that is, right? 75,000 homes, like just at a guess, like it's obviously going to ramp up super quickly at some point. It feels like we're still a little bit of time. I remember, I think it was last year, I remember reading that in the AFR that Robin Denham had just had batteries installed at her house. And I'm like, if that's reportable in the AFR, we're still a long way away. But like, how far away do you think it is?
Well, they talk about attachment rates. And so attachment rates of batteries are about 5 to 10%. I think they're 5% in the US. So we need more people who are buying solar to get batteries.
Yeah.
So I think the costs of just, I've got so many charts here of how the costs have come down. They'll continue to come down over time. It's this concept of payback. And so it's in solar, how it worked is, so paying back the cost of your solar comparing to paying an energy bill. So if you can displace 40% of your energy bill, well, how long can that 40% of your energy bill take to pay back the cost of the solar? And so when I started, looking at it, it was like 10 years to pay back solar, 8, 7, 6, 5, 4, 3, it's 4 to, 3 years now for the payback of your savings to pay back the solar. Batteries are still at 10 years. You can sometimes see examples of it at 7. There are different ways you can bring the payback down. You can see the cost of lithium ion come down. You can see the efficiency increase. You can see subsidies. You can look at monetization models like VPPs and FCAS and, arbitrage. So there are different ways you can bring that payback down. And for the uptake to accelerate, you need to bring the payback down. So we saw it happen with solar. Like, we are big believers that it's going to happen with batteries. And what our big back thing that we're backing now is we're going to actually contribute to the acceleration of uptake of batteries. And that's what, we're looking at all the different parts where we can move the dial on reducing the payback of batteries. And they're the problems that we're going to solve now.
That's really exciting. Well, I look forward to becoming a customer of that, because we certainly looked at it last year and we're like, oh, it's a little expensive. but I'm glad that you are going to bring it to our house. Thank you so much for your time here this evening. It's a very inspirational story from a real hero of green energy in Australia. Thanks for talking to us about how you built the company and giving us some of your time tonight.